Long before Facebook was valued at $50 billion, Jim Breyer saw the company's potential. Jim, a partner and president of Accel Partners, Accel Ventures, was an early investor in Facebook and Groupon, just two of his many successful technology ventures. Now, in August of 2010, Fortune magazine named Jim Breyer one of the 10 smartest people in technology and the smartest investor in technology. Jim is here with us right now in Davos, Switzerland. Jim, you know, we've been talking all morning long about LinkedIn's IPO filing, the company looking to raise as much as $175 million. Are the riches that the founders and the venture capital firms that back LinkedIn stand to make drive others so crazy with greed and jealousy that they're going to rush other companies into offerings as well, possibly before it's time?
Well, we have seen that story, Eric, and I don't think that's going to happen this time. The difference is LinkedIn is a very solid team. Jeff Weiner is an outstanding lead executive, and the question is how fast can it grow? But it has a good business model. I think it'll be a long-term, very successful company. The question would be, how big does it get?
Well, that is a good question, because that's implicit in the valuation. Is a company like that really worth $3 billion?
I can speak to LinkedIn. We are not an investor. And I think over time it either grows into that valuation or grows beyond that. But again, our view is always take a very long-term intrinsic view of quarter-to-quarter progress and growth. $3 to $4 billion for LinkedIn is a reasonably high price, I would say. We see a lot of deals that are priced for perfection today.
How about Facebook? Is it worth $50 billion?
That I cannot comment on.
Well,
no comment on Facebook or Groupon, but in the internet space today, we do see some extraordinarily fast-growing, scaling, profitable companies that are growing well over 300 or 400% a year.
Okay, but to your point about priced for perfection, price to expectation, to many people, the mania for social networking feels like another dot-com bubble. Is there a real danger of that?
There's always a danger. Whether there's a boom-bust cycle that goes on in social commerce or mobile, certainly around Netflix as a public stock today, the difference perhaps is if you take a company like Netflix, it really is an outstanding company. Does it deserve the kinds of valuations that it's currently seeing? God knows. But it's an outstanding company. Well, Reed Hastings is a great CEO, and it's a terrific long-term strategic play on some of the most important trends. But at some point, you lighten up and take a breath and let the company execute and don't try to jump in.
If it were you, would you be taking LinkedIn public now?
I would not.
Why not?
I would not. I like to wait a little bit longer. I don't think there's any rush to go to the public markets. And certainly the advice we give our CEOs is take time, remain private as long as you can, build the business, build the profitability, and most importantly, keep the product passion that is the definition of all the great companies out there. The ones that don't have the long-term, deeply intense 24/7 product passion hit the rails. And I would point to Yahoo and AOL as two that have certainly done that.
Jim, we were talking about LinkedIn's plans to go public. What happens if the first social networking IPO is a flop?
Well, LinkedIn will not be a flop. And we've seen that story many times. Many of the e-commerce companies that went public early in the late 90s did indeed flop. And so I think from our perspective, we're much more focused on, again, those seminal, brilliant, genius product-oriented entrepreneurs continuing to have their heads down, build great teams, great product. And we really don't spend a lot of time thinking about which company went public and which didn't.
Jim, there's been a whole lot of attention, as you know, on the relationship between Facebook, company you continue to be an investor in, and Goldman Sachs, in particular, the private share offering that Goldman Sachs is conducting for Facebook and how things shook out. Given all of that, would you consider working with Goldman again?
Well, I would never speak for Facebook. That's Mark Zuckerberg and David Ebersman and Sheryl Sandberg and the team. As Accel Partners, we have a long history of working with Goldman Sachs, and as Accel Partners, we'll certainly work closely with Goldman Sachs in the future as well.
So as a result of all that, their name isn't mud in Silicon Valley?
It is not mud.
But do firms like Morgan Stanley, Bank of America, JP Morgan maybe have an inside track now on social networking, given the fact that they're leading the LinkedIn IPO?
I think all those firms and a couple of the boutiques have done an outstanding job building relationships in the social networking space. I would point to Allen & Company as another company that has done great work. There is certainly much less consolidation in the investment banking world today from 5 to 7 years ago, when there were only a couple of investment banks that would be viewed as co-leads.
Let me ask you this question, because Google has been another company in the news as of late. Will Google be a more competitive company, more competitive threat, let's put it that way, with Larry Page as the CEO instead of Eric Schmidt?
I don't know if they'll be more competitive. I have to say Google is the single greatest direct marketing company in the history of the world. What Eric did over 10 years is extraordinary. And Larry Page and Sergey, their intensity, their product vision are off charts. They are in the class of Steve Jobs, Jeff Bezos, and others. Certainly, whether it's Facebook, whether it's Groupon, any number of companies that we participate in, we are always deeply focused on Google as both a partner and, in many cases, as a competitive threat. I don't see that changing.
Okay, but many people say Google lost the plot on social networking. Do you think it can get back in the game?
I always assume they can, and I'm not sure they ever lost the plot.
All right, and before we go, what is the next big thing in startup land going to be? What's the next big tech idea?
Well, the big trend we're investing, whether it's China, U.S., Brooklyn, New York, is what we call social commerce, using people recommendations, social platforms like Facebook, and developing true next-generation commerce applications, shopping applications, where black box recommendations no longer matter.
Jim, thank you so much. Great insights into the world of social networking and the business of Accel Partners. Jim Breyer, one of the first investors in Facebook.